First thing I wrote down in my journal was I want 100 units and then $1 million of equity. Like that was the first thing I was pursuing. That was more based on fear. I really thought that if I had those units and the equity that I would be able to protect myself from the hurts that surrounded me. And once I got to that destination, I saw it was actually a mirage. Like it really didn't change anything. All right, well, Lord, what do you want me to do?
Welcome back to the Roots podcast. I am Tyler Lingle, and this is my co-host, Max Moore. We are the founders of Roots Realty Co. We've helped investors buy over 500 homes in the last 3 years, and today we have a special guest and a friend and a brother in Christ, Ethan Fernhaber, an Indianapolis developer who's built and operates thousands of multifamily units while using housing as a tool to restore hope in underserved communities. He did this by vertically integrating development, modular construction, and property management, all built around a people-first, faith-driven mission. Today, Ethan's breaking down how to make the jump from residential to commercial real estate and how to do it in a way that's both redemptive and sustainable. Thanks for coming on the podcast, Ethan.
Yeah, what an honor to be with everyone today.
We're so excited to dive into your story. One of the first questions we like to ask a lot of guests is, if you had a billboard on, say, 465 that people could see all year, what would that billboard say and why?
Yeah, the big word on my heart is hope, to encourage people to be hopeful, to have hope. One thing that my wife taught me is, hope is like a destination, but it's also a pathway. So how might we help be a Sherpa for other people, showing them a pathway to hope?
What did you say? Hope?
Yeah.
Period?
Yeah.
Any specific color in the text?
I just got a new logo, so it could be the state of Indiana with a heart on top of a flower, something that would, be birthed and be appreciated.
Oh, that's beautiful. I think if we lose hope, that would be the devastation.
It is.
And that's what we can always tie back to, right? Is that hope can stay alive. Just one person has to continue to have it if all else fails.
Yeah.
Shifting gears back towards real estate a little bit, I was reading this past week, just kind of studying up for the episode, and I read this story of you going from a double-wide trailer to an apartment building, and the way that it was written was that if it was just that first property, double-wide trailer, skip a few into the apartment buildings. Tell me about that first deal, though, buying your first rental property. When was it? What was the price? Kind of breaking down, if you can recall the numbers.
Yeah, it was back in 2003, and it was, like you said, a double-wide Nowensburg, Indiana. It was actually an estate sale, and it was for $20,000. So the person who owned it died, and their son was selling it. So that was like the exact amount of our home equity line of credit. So we put it all on the line.
Let's
got
go.
That.
Good gamble.
Yeah. And then I think we eventually did a cash out refi. I think my payment was like $232 a month, and we were renting it for like $550. So I was like, man, we're killing it. Let's do that again. So we got our equity back, and then we immediately pivoted into large apartment complexes by buying 2 single wides on one lot. Which was an absolutely terrible investment. I'm proud to say both of those homes I got to tear down later in my career. But, I've always been good at spreadsheets, and they had high predicted returns, but very low returns in reality. So,
What did you take away from that first deal?
Yeah, I think understanding what I'm not good at. I remember replacing the hot water heater and then calling my brother and asking him how to stop the propane from leaking into the home because there was like 9 different joints that were leaking because I didn't know that, the pipe tape existed. So I was like, man, if we're going to scale this thing, I'm not doing the rehabs anymore. So yeah, the maintenance part is terrible. And, I came from banking and then moved into real estate. So I've always been better at the numbers and I had the physical work. But because I'm not good at it, but I have a high regard for it, I've always honored the people who do the work. And I think that's really allowed me to scale and grow, using not an exploitive model, but how might we benefit the people who are actually creating the value that hopefully all of us would get to share and enjoy.
I think it has to work from the top down, where you have to be able to see the vision, and somebody can come in and make that a reality and use pipe tape to not have propane leaking into the double wide trailer. You said something that I want to highlight, which was predictive returns were extremely high in the Excel spreadsheet.
Yeah.
But in reality, it was low.
Yeah.
Is that true for all single family?
Oh, single family's so tough.
Yeah.
I think, it's just difficult. Scattered site, you don't have control. Everyone is built differently, different SKUs in each one. I mean, we built the company and we did maybe 150 single family renovations, and then eventually sold those homes as, I figured out after a long period of time that it's really hard to make any kind of profit within the single family market. But I go back to Monopoly, right? Like, 3 greenhouses, 4 greenhouses, 1 red hotel. So how can you create equity within that single family market and then reinvest it in something larger that's more predictable and more easily controlled?
Is it possible to skip with single family to go straight?
It wasn't for me because
Hasn't been for me either.
Yeah, I hear you. I mean, I guess, if, generationally there were large amounts of wealth passed on to me, then I would be able to, invest in a bigger deal. But I know sometimes the people aren't ready to steward that amount of wealth either. So I would look at single families as a great training ground, but it might not be, it depends on someone's assignment. If you're like, hey, I just want to own 3 homes debt free and I'm going to have that as my retirement, like that's great. But my specific assignment, it was always more. It was always bigger. But it's between 70 and 300 units. So we don't specialize in 1,000-unit complexes or anything like that.
Which is a very specific part of the marketplace, the 70 to 300, at least in size when driving around and you're thinking of apartment complexes. There's a lot of units in there that you can't realize. You can't judge the book by its cover. Yeah. I've pulled into some that I'm like, yeah, there's probably 100 here, and it's like 500. Just the way that they're
some big
stacked
ones,
into each other.
Yeah.
No, that's awesome. We obviously do a lot of single family investing, and we help people invest. And I feel like we serve right now as that gateway into the market. And we are experiencing a lot of clients learning those lessons quickly.
Yeah.
Expected returns to be great. But, we have this eviction, and the tenant, guess what? Tore everything up. And that's it. That's just a one material house. It's expensive to replace the things that you just bought. It's a cycle that's can be exhausting for sure.
Yeah.
Within your story, we all know kind of the way this has gone up to 5,000 units with renewing and volume on and Helix all working together. We'll, I'm sure, get into that. But you use the word assignment, which I think is different because like the doctor who's investing for one single family home for the 20% IRR, they quit, right? They're like, this is too much work. I'm going to go back to my IRA, just giving money to my brokerage account. And that's the way the cookie crumbles for some people. But yours was obviously more perseverance, I think, because of that word assignment. When did you realize that? Was that from the very beginning with the double wide, or
no?
When did that kind of click?
It was my first. The first thing I wrote down in my journal was I want 100 units and then $1 million of equity. Like that was the first thing I was pursuing, but that was more based on like fear. I really thought that if I had that unit and the equity, that I would be able to protect myself from the hurts that surrounded me. And once I got to that destination, I saw it was actually a mirage. Like it really didn't change anything. So then it was like, all right, well, Lord, what do you want me to do. And so the next assignment I got was 40 communities by 2030. And a community can be an apartment complex, or it could be an organization or some kind of redemptive space. And happy to report 2026 that we're there. So we have over 30 apartment complexes, 5 operating entities, and myriad of redemptive spaces that we're operating now. So now the question is, how can we go deeper instead of wider? So how can we be more intentional about the way that we operate within our apartment communities, and how can we impact our employees' lives the most? So
It's interesting because I feel like it follows your relationship and journey with Christ,
yeah,
which I want listeners to hear that, because that they might be seduced by the 5,000 units or
yeah,
millions of dollars of equity, but that's not what gets you up in the morning. And I know that.
yeah,
Like the first time I went to your office, you and Eli, your VP of Helix, prayed over me for like an hour. And like we talked about business for maybe 2 seconds. And I was like, I was like confused, but I was like also joy filled.
yeah.
And so I'm just interested, how would you say your relationship with Christ intersected inside that journey of realizing, you want to do 40 communities, et cetera? Like,
Yeah, I would say that it started with surrender, right? I had to die to myself and give up at a point in time in 2009 when we were going through the financial collapse. I was close to bankruptcy, right? I had so many single families, and we ended up taking all of our equity and putting it down on one multifamily that we named after our church that we were attending. We still own it today. It's in Anderson, Indiana, 132 units. And so that the income stream from that multifamily prevented my bankruptcy during those dark years. And then eventually, I think it's just like greater intimacy every year, greater intimacy with the Lord, greater intimacy with my spouse, trying to get to the person that the Lord intended me to be, more authentically how I'm built, what my specific assignment is. And, business is a great way to rub off some of the sharp edges that we have. So this idea of how do we balance truth and grace in our whole life? So with the contractor who doesn't perform as planned, how do you, look them in the eye, set expectations? You don't want to go the sue me route, you know what I mean? But what was fair, you know what I mean? How did we get to this place? How do we create expectations and agreements before we begin on a journey to cause the disruption to be less over time? And I really thought like by now I'd have it all figured out, but every single day I'm learning, and I think like every human being I interact with is a treasure bearer for me. Like even the lady with a sign on the side of the road holds a treasure that she wants to share with me. And when you change your outlook, you know what I mean, and look at every single human being as God's most precious possession, it just changes the way that you act.
You can't just walk into this industry and want wealth. It doesn't work. I don't think you can fake it.
Yeah.
A lot of people can and make it work out. But you said something that's extremely important, which is that real estate can just take those edges and just make them nice and smooth. You can get all of the rough parts taken out. And it'll shape you ultimately. And that's like you walk in as just ignorant, ready to go, and spreadsheet says 20 grand on this double wide, it's going to look great.
Yeah.
And in reality, it's a trailer that you now own and you have to take care of.
Yeah.
And it isn't something that is in your possession.
Yeah.
And when the water heater breaks, the answer can't be take a cold shower.
Yeah.
Suck
it's
it up.
literally not a spreadsheet.
Right. It's not. It's a house.
It's actually a 3-dimensional thing with a soul.
Yeah.
Souls
Material.
living in it, right? Yeah. It's incredibly important, right?
Where's the transition or the calling or assignment to employ past incarcerated? I know with Value Mod,
Yeah.
every is it over 50% of the workforce at Value
Over
Mod?
25.
Over
yeah.
25 at Value Mod. Just maybe speak to what Value Mod is and how that came to be.
Yeah. Well, my father-in-law employed the formerly incarcerated and currently addicted up in Wisconsin. And he was a great role model for me. He was a carpenter who worked with his hands his whole life. And so, with Steve as an example, we started a reentry program probably 7 or 8 years ago with John Gammon. He's our director of reentry and just is one of my spiritual mentors. So, yeah, John hired Ronald, and the reentry program was birthed. And so we started doing apartment renovations in some of our communities that we were purchasing. We did a lot of acquisition renovation, and we bought transit vans and sent people where the work was. But when my co-founder, Matt Crouch, had the idea of Volume Mod, the idea of bringing that people group indoors to the same place every single day was super attractional.
Yeah.
It's just hard to have a huge impact on a dispersed community. So we had that as part of our mission to employ the formerly incarcerated individuals. And I'm proud to say that they're some of our most loyal and trusted individuals. I think the potential that exists in the 50,000 heartbeats that are locked up today in the state of Indiana is way underestimated. And in my experience, like, turning your back on problems doesn't make them better, doesn't make them go away. So if you imagine a roof over our entire state, how are we taking care of, some illnesses that exist within our society? And I think if we welcome those people who are exiting incarceration, provide them housing, employment, transportation, and daycare, I think the recidivism rate is going to go down tremendously. And that'll benefit everyone.
Yeah,
right?
it will. And a lot of those transitional programs don't work. There's a lot of good hearts in the direction there, but I don't know why, and I don't want to get into the politics of it, but it seems like the failure rate is higher than the success rate. And what I've seen and heard from others that I didn't even know knew you and our network, because this is such a small city, and the praise that they give on Value Mod and how Value Mod is shaping and being redemptive. It's impressive to see. And we got to spend some time in October, you and I, at St. Myra in Indiana at a silence retreat. There wasn't a ton of talking, but there was plenty of downtime, and I got to know you better. And in that, you rubbed off on me. And if you remember, I brought a problem, which was my GNC there.
Yeah.
And the performance of that, I ended up hiring a guy by the name of Jason. Jason, I hope you're watching. He is not formerly incarcerated, but he's had life. He's 45, still trying to figure it all out. And I took the risk to buy him a car and employ him.
Yeah.
And which found like monumental to do for me.
Yeah.
And I'm proud to say, like 3 months later, the store is completely turned around.
Come on.
And it's been great. And I think what we were praying for is that there was some sort of relief valve there, which I felt like probably the room was intending that to be a closure plan. And the Lord had completely different work in the store. So it's been a great journey, and continue to pray for it. But I wanted to share that.
Even if it doesn't work out, no one can ever take that away from you.
Yeah.
Max. I mean, that's a huge deal, right?
Yeah.
I mean, yeah.
Right. In eternity, are we really going to care about our P&L?
Not at all.
The business success? Will we be talking about it? Will we be bragging about it?
No.
It'll be about souls.
Well, and God owns it all, right? Like, either you believe that or you don't. Even all the 5,000 units, like, I'm renting them from the Lord. They're not mine. Like, stop making the loan payment. Figure out the bank will get them, and then don't pay the taxes. The government would get them, and stop breathing. It's the Lord's. It was His earth, everything in it. You know what I mean? So I'm just renting it as well.
Yeah. Just stewarding it for the moment.
Right.
I love that.
Yeah. I want to get into a topic, and I find it hard for some investors like you to, not that you would find it hard to do this, but I feel like when you're up in the clouds buying these apartment buildings, it's another single family home for you, right? You know how to analyze it, what the rents are you need to hit to cover the debt service and all that. It seems really complex for the Maxes and I's, the AJs, the Traces, that's our producers, who are maybe wanting to get into that. And I'm not saying everyone should be a commercial real estate investor, but what was that jump like from the single family homes to the commercial? And how does someone do it who's like on LoopNet searching, just treading water? Like, how do you actually do that and get into that if that's what your assignment is?
Well, in real estate, you make your money when you buy the deal, right? So try to look for an opportunity, right? And you should be able to smell that more than see that. So what did I do to sniff out opportunities? Like sheriff sales were one thing, right? So buying vacant foreclosure houses, you guys probably know about that. There's also U.S. Marshal sales. I purchased, an apartment building through that. USDA, rural development. I purchased several smaller assets that were all vacant from them. And, so those are in underserved areas. And if you want abnormal returns, then you've got to do abnormal stuff. Like that's just how it works, right? So I was in banking before I got in real estate, and a distressed environment can create wealth. It could be terrible, or you could, buy at a great value. So for me, getting into smaller apartment complexes and then purchasing them at a greatly reduced cost was a great way to create wealth over time. I would, just affirm you guys, like if you're operating 6, 7, 8, 9, 10 units, like it's the same thing. It's just add a 0 or 2 and then add more lines on your expense statement, like our budgeting, like it's super brutal. We got like 10 different tabs and they all come together on one tab, and then there's like 400 lines. So understanding where the money is coming from and understanding where the money is going is super, super important. So account for your single family like it was a multifamily, and you guys know how net operating income derives value. Like think about the cost of a flapper for a toilet, and then how much that toilet flapper would actually change the value of the asset. If you do 20x on everything, like the $10 item's now a $200 item, like as an operator, you've got to pay attention to all those details, because the dimes will make you millions in real estate when you extrapolate their value.
It's funny how I just talked to a guy East who also I think was on your guys' retreat.
Yeah.
He's been on our podcast. People should go listen to it, but he's like a medium-term rental kind of expert. He does workforce housing where they're building a lot of these data centers, but he's selling a duplex in Greenfield. And I asked him, like, this is making $6,500 a month. Your mortgage is like $1,000. Like, why are you selling this? This is so profitable. And he's like, I can't add any more value. He's like, I could make it produce $10,000 a month. The value in residential is based on the comps. So he's like, I can't cash out refi more. I can't sell it for more. It's based on the appraised value.
And the return on equity probably outweighs the cash on cash too.
So he's just like, I'll take my $1,000 equity and put it into a motel. He's like, then when I raise that income on my P&L, the appraiser will tell me it's worth $2 million versus $750.
Always trading up, right?
Yeah.
And the other thing is like keep your chips on the table. Some guys, gals, they make a little bit of money in real estate, and then they buy a big single family residence or a couple of new cars, and they took their chips off the table. You know what I mean? My chips have stayed on the table. So, like our house, we bought at a foreclosure for $222,000 and $1 because we were the only bidder at the sheriff's sale. You know what I mean? Like we didn't trade up into the mega mansion. We wanted to keep the money within the business. And if you look at what compounding returns can do, if you keep your real estate money in real estate and keep trading up in asset classes, that's a really great way to create wealth, but you got to give it decades, not months. I mean, there was 10 years plus just grinding it out every single year. You know what I mean? And so but if you fell asleep in 1990 and woke up in 2020 with the same amount of real estate, like, you're doing okay. So buy as much as you can, then hang on tight, and then give it 30 years. You're going to be all right.
How long do you keep your chips on the table per property before you trade up? Is there a set?
Yeah, so for me, it's 70 to 300 units. If that's the assignment and it's 30 multifamily communities, I want to keep 30. So if I build a new one or acquire a new one, then there will be some trading within the portfolio. But then you can look at which one doesn't have a community center, which one is in a neighborhood or which one are you not doing as well as you could with, like, maintenance or staffing or area or location. And for me, my assignment was just the state of Indiana. So, there's a great deal in Ohio. That's great. It's just not for me,
That was going to be my next question is, could you replicate the 5,000 in a different state and without you being replanted in a different state?
I wouldn't be me doing it.
Yeah.
You know what I mean?
It's not your assignment.
Mine is 30 in the state of Indiana. So, I want to be able to visit every deal every year. I want to wish every employee happy birthday. I want to experience this journey with these other human beings. And I don't, I'm not going to be some of the more prolific developers in the state. Just because you can doesn't mean you should.
Yeah. No, and I love that. We have a big influx. How we got started was helping people from out of state purchase here.
Yeah.
And that has been, we've learned along the way, might not be the best way to go about it. If it's just on a simple return schedule, maybe there's a case to make if you are here and then you split time and, you have some roots in Indiana. I think that you can make it work. But from distance in the single family land, if it's not working with people that are here, I don't know how it works with the people that are at Apple or some big developer.
Mine here.
Yeah,
I'm in real estate full time.
Yeah, and you can touch the doorknob and go through the threshold and see the problems.
Yeah.
What's a better way to do it from distance? If you are a tech guy that's got mega millions and you want to be able to diversify.
Yeah. Well, I had the high compliment of somebody referring an investor to me, and he said, look, it's all about who you hitch your wagon to. So, think of me as a horse, probably a Clydesdale. And we go out and we take new ground, right? Yep. So we are a good operator. We negotiate well. We have good systems and processes. We take care of our residents. We care about building community. We've got tons of great relationships here. So if you're a tech entrepreneur, I would hitch my wagon to somebody like me. Yeah. And Indianapolis has got a heavy anointing for great apartment developers. I mean, all around the nation, but they are based here. So there are lots of great operators, and I would say, like, with the upcoming people, like, you guys are the creative class, right? Like, so do development different, like,
don't try to mimic what everyone else is doing. Right?
Yeah, exactly. Right. You guys can be the fresh wind within the development space. So, like, if you're doing, some kind of like Airbnb model in a remote location using dissimilar materials, it's better than, a crappy 2-bedroom in a challenging area of our city, right?
Yeah.
You can hits home.
Dang it. So we got to head back to Danville is what Ethan's saying.
Absolutely.
And we can make it happen. Does that, like, tactfully look like a 401k? You can invest in real estate within a 401k, right? That's how it works.
It's complicated. You can do it.
You've got to, you can't
version
own
of
it.
self-directed IRA, right?
Self-directed, yeah.
It does carry risk like any investment.
Yeah, I just want to better service clients. And when we've had Tad on the show and we've gotten to talk to Sib, and the more and more that I have connection with you guys who are doing it on a bigger scale, I realized that there's just a better way for those clients to invest and
To maybe be a silent partner and
just be an LP.
Yeah.
Just
Yeah.
invest and bet on
with
the
a
horse.
good operator and not take on a second job as an operator. I think that's what they realize, right? Is I just had a guy yesterday on the phone saying, I can't rent out this last unit. And I was like, have you been on the street? It's like, no, I was told. Well, you were told. That's where you messed up.
Yeah.
And your property management told you this rent rate. Well, guess what? I know the rent rate's $300 less than you were trying to get.
Yeah.
It was like really simple. It's like, dude, your assumptions were just all wrong.
Yeah.
And I had to be the one to
Here's what reality
burst the
is.
bubble.
Yeah. I hear ya.
And he's like, oh, it's dawning on him. Maybe I wasn't the best operator for this particular duplex,
Yeah.
even at a duplex scale, right?
Yeah.
That's where the bigger pockets is awesome for empowering people. But they always say, look in your backyard first. He's from Boston. Well, if you can't invest in your backyard, then find someone who is in the backyard, like you guys, like a Helix or Millhouse.
Yeah. Say that in 2026, I felt called to raise capital. What does that look like? How do I do that in practice?
Yeah, we're trying to do that right now. And we always say relationships are more important than transactions. So we're just building relationships.
Is it just a phone call with the deal? I know I have the relationships. I just think I need to click the speed dial button.
Yeah. Well, put together a compelling pitch deck. If you find the right deal, the money's already there, And so, lack of capital, like that's a lie. There is no such thing. It's a lack of creativity. It's lack of vision
Yeah.
that really causes deals to go unfunded.
No, that's a great call. What equity position, if you were just mentoring me, should I have in a project? Where should I personally have my money at?
Well, I would say retain as much equity as possible.
Yeah.
You know what I mean? And you're the first deal that I did, there were some duplexes that we bought, and I was like, I'll do all the work if you put up all the money. And that's the way we did it. And then we were 50-50 partners. And, I was a good steward of the capital that was there. But then, we leased it up, stabilized it, resold it, and then we rolled that from 33 duplexes into a 152 unit apartment building.
Wow.
So keep your chips on the table, trade up in asset classes, and then create a compelling vision. And then more important than anything else, like find a really good deal. You know what I mean? Like don't find a
It's
link
easy to have conviction when there's a good deal in front of you.
Right.
Yeah.
Because you're not worried for them. And that it's probably sniffed out from a lot of investors.
Yeah. Well,
Yeah.
and you just glaze by Danville, like that's going to be a real thing. Like what moves are you making today to get ahead of the wave that's coming?
Yeah.
We'll talk after
We're
this.
planting roots.
We don't want that to go public.
No,
huh?
no,
Okay.
no. I mean, my dad and I have a building, and maybe I think there's a world in which Max could partner with us. But with the 50-50 deal, is that how you've continued to scale into your new investments? You do all the work, you raise money at 50. Is it
No,
more
yeah.
complex these days?
Way more complex, I'm sure.
It is, yeah. Well, and there's it's concentric circles. Have you guys heard of Oikos before?
Nope.
The yogurt company? What do they have to teach us? Let's learn. No, I'm joking. Winkos?
It's like the 8 to 12 people who are closest to you, So
Okay.
with those people, they're at a different level than anyone else. And then it's like concentric circles, And so the people who are closest to you will do the most creative things with you because they trust you, right? Because, business always operates at the speed of trust.
Yeah.
So think about the 8 to 12. They know you best. They'll be most unique. And then as you start to just, hey, we blind emailed someone, they're going to want a deal that's, more standard within the industry. But there's a lot of deals that never see the light of day because of the 8 to 12,
Yeah.
So
I need to become a simplifier to write or actually hire a simplifier. I'm not going to become a simplifier. My problem is those emails get quite complex. Keep your money
I think
here.
you're on
and
the
this
same side of
percentage.
the table as a simplifier.
Yeah.
There's
so
the
I've got the part.
complexifiers and the simplifier. I don't know if you heard of this.
No, that's
Mental
new to me.
model. It's awesome. It's just basically there's some people that want to like take in all the information and like make it complex for them, and then share it to the word simple. And then there's other people that like a bunch of information coming in is complex. So let me simplify it inside. It's just how you gather information and perceive complex problems.
Yeah.
Simplifiers versus complexifiers in general tend to be like the stereotypical like introverted person that wants to be on a whiteboard or computer by themselves figuring it all out before they say a word. The simplifiers are usually talking to learn. They're like asking all the questions. And this is super generic. It's like any of these personality things. But Peter Servos, I think is in your Tiger. I don't know if you're in Tiger 21. He just shared a slide deck to us that had this mental model. And I found it's cool. It just gives you language to understanding how different entrepreneurs think through problems. So I'm sure it's out there if people want to look it up online.
And when I go to raise capital, I'm the complexifier
It's
into
like,
the email.
It's like the meme
It's
with
like-
the math and the guy looking it
it's
over.
like, just a question mark above their head.
Yeah.
Steam and a
Does any of
delete
this
button.
makes sense?
Yeah.
And sometimes as simple as, hey, I need the money and you're going to have 50%, but I'm going to do all the work and here's what you're going to make. And they say yes.
Yeah, and it is. And a lot
Simple.
of people with money don't have a lot of time. There's huge transactions that are just done via text message. You know what I mean? It's not about the
The
slick.
best transactions, yeah. Oftentimes.
Yeah. I got to stop.
Just a quick call.
I got to stop watching The Wolf of Wall Street and just start texting.
That's a line for the year.
Yeah. What goals are you working on now going forward? 40 communities? Are we keeping those communities? Are they going to change?
Yeah, absolutely. Yeah. And, to allow these communities freedom, abundance in my own life and all the lives that I interact with is super important with me. We're, trying to have each entity as its standalone entity as well. So each one of our entities has a specific leader, either president or vice president, whose job is to carry out the task of the entity. And so how can I pour into those leaders as they pour into other people? I don't want to exit. Like, I love waking up and being me every day. I mean, I get to go to an office at a house factory and open up a door and see 100 human beings all working to make 2 new modules every single day. Like,
That's wonderful.
I know that's so much better than the Salesforce tower. You know what I mean? Like, you can smell wood, you can see wires being ran. You know what I mean? You can do fist bumps, hugs, high
When you're kind of
fives.
in an underserved community where that is based, right?
Yeah, there's tons of potential creativity in that community, the Far East Side, and I've learned and developed so much by being a part of that community now.
I love the thing that I hope people hear is that you see the treasure everyone has, which I think is not you. I think it's Jesus in you. I think that's what he sees in all of us is, the treasure that's beneath us and our egos and what we're trying to prove until we just open up our palms, to receive.
Yeah.
We have some rapid fire questions we like to end with. That's a harsh transition.
AJ will smooth out the corners.
What is celebrating with your wife? What's your favorite date night spot in Indianapolis?
Probably the Rusty Bucket on 86 and Ditch. We're pretty cheap dates. So we just like to hang out,
Rusty
and it's a
Bucket.
spot where we can have a great conversation and doesn't require that much complexity. And by
Sounds
the-
like a dive bar.
Yeah.
No, it's not. But
It's a predictable experience. So
Yeah. That is the first time someone has said somewhere that I have been.
all right.
Let's go.
Rusty Bucket.
Go.
I don't.
All the
everybody's-
VIPs, Max.
Yeah,
The Rusty
right.
Bucket.
You
Yeah.
guys will hang out at Rusty Bucket. I'll be at the steakhouse. No, I'm just kidding. I'm joking.
You'll be in whatever restaurants everybody says in Carmel is what
Yeah.
ends up happening. The true Carmel
Monterey
downtown.
and all those. But yeah.
What is one habit that changed your life?
I would say fasting. It's probably been 7 or 8 years. I do 40 days per year. And, for me, I'm kind of a pleasure guy. So saying no to certain foods and, things that are where I experience pleasure has allowed me to build my own self-control. And then also, like, as your calorie deficit, the world gets a lot smaller. So it's easier to pay attention to the meaningful things in your life. Some of the outside stuff becomes a lot less distracting. So when you're cold and, like tired and not feeling great and, like, does it really matter? Nah.
Right.
So yeah, I would say that's a good keystone habit. Typically it's towards the front of the year. This year it's going to be around Lent. We're doing a fast together through Multiply, Indiana for 40 days, and that'll be the initiative this year.
Yeah, I love that.
You're fasting for 40 days, or is that just daytime hours?
40
Or-
days per year. So some
Okay.
years it's like 21 days and then a 10-day, and then one year it was like 40 days straight, and I lost like 38 pounds, and like it was like a all liquids fast. But each year it's just, Lord, what are you calling me to give up this year of my life and when? And then as he would prompt, just to be obedient. And so, yeah, it's a good keystone habit to remember that, it's the spirit man, not the flesh man, that's actually in charge of this operating system called a body.
I love that. I'll join you this year. I've never fasted.
Okay.
Never fasted.
It's a
I'll
great
join you this
habit.
year.
I haven't done it a lot. I just thought about it this morning. Maybe the Holy Spirit was preparing
Yeah.
me. It's like a lost habit. Like, I've been talking to some church friends who are like, well, Jesus didn't command us to fast. But it's like, no, look at what he did, and look at what all the apostles did.
Yeah.
They were all fasting. It was assumed he would fast.
Yeah.
So he didn't even have to say it.
Yeah.
Just look at what he did. Obviously, he fasted before his ministry. Last question. I know you love home and you love where we are in Indianapolis. You obviously have built enough wealth. You could go move to the beach somewhere, but you stay here and plant your feet here. What is one word you would use to describe Indianapolis?
I would probably say potential. I just think that, the relationships that we have here are truly exceptional. Where like they always say about like the 7 degrees in Indy, it's like 1 or 2 degrees, before you know other people. And, people like stick here. So you can have like generations, that would, treat each other with dignity and respect and do business together. And so I'm just expectant for what the Lord will do in this city and state in the decades to come.
Yeah.
Awesome.
I love that. That's why I'm here, and that's why we're planted here. This has been another episode of the Roots Podcast. Ethan, thank you for joining. It was a pleasure to have you. Make sure to like and subscribe.
And share. Peace.